everybody. Welcome to the Route Consultant Weekly Webinar. For those of you who are here for the first time, my name is Josh Gregory. I am the Vice President of Education here at Route Consultant. And all that means is that I'm going to work with both our buyers looking to get into the space for the first time, help educate them on the space, but I also work with contractors, help them find efficiencies and add profitability to their business every day. If you come here every week, you may notice that I have a little bit different venue than I normally do in my background. I am in Nashville, and we are one of the many states that were crushed by snow this week. So I have been trapped at home for at least 3 days now, and we'll see how many more days I am trapped here. We got 8 inches, which for some of you, that might not seem like too much, but for here, that is end of the world level of snow. So I am trapped at home for the time being. And so this is the new webinar background for at least for today. And if you've been here before, for everyone who's been here plenty of times, you'll know kind of the way this works, but just a general overview of the day and this webinar. I'll do a quick intro and disclaimer in just a second, and then I will introduce a co-host and we will go through some content, and then we will open it up for pure Q&A at the end. And so those questions can be about anything. Whether it's about what we talk about today or anything about the FedEx, Amazon, anything in the logistics space, we're here to answer. Now, you can submit those questions at any time. Make sure, though, that when you're typing them in and putting them in for us to answer, that you put it in the Q&A button at the bottom of the window. If you type it in the chat, I'm going to miss it completely. So if you do have questions, make sure you put it in the Q&A for us to answer later. Now, before I go too much farther, quickly I have to read the disclaimer as I do every week. So Route Consultant is not endorsed by and is not recommended by Federal Express Corporation, FedEx Ground, or Amazon. Route Consultant is not sponsored by, is not approved by, is not associated with, and has no connection whatsoever with Federal Express Corporation, FedEx Ground, or Amazon. So now that all of that intro is out of the way and that I've read my fun disclaimer, I just wanted to go over quickly what we're going to be talking about today. So one of the most essential vendors that you're going to be working with in any part of the logistics space, and oftentimes in businesses as a whole, that you're going to be working with to secure your business health is your insurance provider. But actually determining the best rates and ensuring the right type and the right amount of coverage for your business and for your employees can be overwhelming. And I know what that process is like. So what we've done is we've brought on Steve here from OVD to help talk through the renewal process, how to shop for better rates, what you need to be thinking about and asking throughout that process. So Steve, I see you there. If you just want to give a quick intro on you and OVD, and then we'll get started.
Yeah, absolutely. Josh, thanks for having me on today. And I definitely resonate with a few others in other parts of the country that are dealing with a little bit more snowfall than 8 inches. Looking out my office window in West Michigan, we've got about 36 inches out there. So it's definitely been an interesting start to the new year up here. All that to say, yeah, Steve Binnig with OVD Insurance. OVD, we're an independent insurance broker. I sit in our headquarters, which is in Grand Rapids, Michigan, and we have 2 satellite offices, one in Pittsburgh, Pennsylvania, and one in Raleigh, North Carolina. For about the past 3 years, I have been working explicitly on our last mile delivery program. So together, our team, we work with about 300 contractors in 46 different states. So mainly FedEx, we've got some Amazon sprinkled in there. And then in general, like you were saying earlier, Josh, our agency as a whole, we work with a lot of transportation providers.
Perfect. Now, like I mentioned a second ago, we're going to talk about a lot of details about these different insurances and the process and the renewal process, but there are those on this call who are not currently contractors, still trying to get into the space. So let's start by just doing a really quick overview of the insurances that FedEx Ground contractors have to do and have to carry to be compliant. And know that if you're in any of these other spaces, most of these are required. And if they're not required, they're at least recommended. So Steve, if you just want to give a quick intro of those overview.
Yeah, I can. So for your FedEx Ground contract, you have to carry 3 coverages, and then a 4th is strongly recommended, like you were alluding to, Josh. So workers' compensation is that first coverage. Workers' compensation, if you have W-2 employees, which as a FedEx Ground contractor, all of your employees, your managers, your drivers, they are W-2. Both by statutory law and in most states by federal law, you have to provide workers' compensation. What that does is it steps in the event of an injury or an illness that your employee contracts while they are performing their usual job functions. So Obviously, for last mile delivery contractors, you've got a lot of guys getting in and out of vehicles every single day. You've got some women that are working for you moving packages, some men working for you that are moving packages. So you're going to see some injuries in this space. Past that, you're required to carry non-trucking liability. Non-trucking liability, what it does, it steps in to really handle a third party's damages, whether it's their vehicle or bodily injury that a third party might incur, from an event that is caused by your vehicle. The reason it's called non-trucking liability, this is liability insurance that only kicks in during non-trucking events. So in the case of FedEx ground contractors, when you're out delivering packages, when you're out under the authority of FedEx ground, because you're operating underneath their DOT, their primary liability steps in to defend you most of the time. In the event that your trucks are on the road for what we deem as personal use, then that non-trucking liability insurance would kick in. Past that, the final requirement for FedEx ground contractors is employment practices liability. We call it EPLI for short. EPLI, what it's designed to do is step in to defend business owners as well as any acting agent on behalf of the company. So employees, managers, so on and so forth. And this coverage will respond if you're ever sued, whether it's legitimate or illegitimate, for claims of harassment, discrimination, wrongful hiring, wrongful firing. And then the piece of coverage that I kind of jumped over that you're not necessarily required to carry, but we do strongly recommend it. That's auto physical damage insurance. And that is the insurance that's actually going to step in if your property, your units are damaged in an incident. That's the coverage that responds, less your deductible to fix or total out your truck.
Perfect. Yeah. And there's some variance across different industries in terms of what you have to have and what you don't. And if you have questions on that, we can answer it later. But those are the kind of the big ones, especially the ones that are required for the FedEx side. Now, when they're thinking about this, like I said, new buyers, when they're thinking about this, what's the kind of the cost breakdown of each coverage? What's the biggest piece of the pie? How do you think about it?
Yeah, for sure. So specific to FedEx, like you said, the overwhelming majority of contractors are going to spend the most amount of premium on workers' compensation. Typically, across the accounts that I'm familiar with, I see that spend being about 65 to 80% of the insurance pie, if you will. After that, if we combine the non-trucking liability and auto physical damage together, that typically makes up somewhere between 20 and 25% of the insurance pie. And then that employment practices liability piece is going to make up the rest of it, along with any other ancillary coverages that you might have to carry for bank requirements or lease requirements, things of that nature. To just expand a little bit, Josh, on some of those other requirements outside of FedEx ground, if you're a traditional trucking business or maybe working for Amazon, you have requirements to carry primary auto liability, general liability, and also cargo liability are typically the three coverages that we see kick in.
Yeah. And so insurance becomes a much bigger expense and a bigger thing to manage when you're operating outside of the FedEx ecosystem, because FedEx, one of the big advantages of FedEx is you operate under their DOT number. And so that does save you from some of those liability costs. Now, when they're thinking about the purchase process, does everybody in the FedEx space just buy from one person? Are there different agencies? How does that work?
Yeah, it's a really good question. So the role of an independent broker like myself is that we actually act as the sales arm for insurance carriers. So most insurance carriers don't have business to customer salespeople. So they rely on independent agencies like an OVD, and there's other independent agencies out there that sell on behalf of those carriers. It's our job to take the information of a customer, go out to a myriad of different carriers, depending on the line of coverage. There's several that we can approach, and ultimately come back with what we deem to be the most competitively priced products, the best product, the products that offer the best coverage, so on and so forth. There are a few brokers out there that have exclusive products. We have a few exclusive products of our own that are specific to last mile delivery contractors, but kind of broad strokes, if you're working with an independent agent that's familiar with the transportation space, they should be able to access the competitive markets on your behalf.
Yeah. And so if you ever hear that there's only one option on the insurance side when you're going through this, it's not true. There are a bunch of options, and sometimes that rumor and that misconception is out there. So now starting to get into some of this process thing. So if they're already a contractor and they already have coverage, how often does the coverage renew? Is it one time of year that they can look at purchasing, or can they change whenever? How does that work?
Yeah. So just to talk about the FedEx specific insurances. So let's start with workers' compensation because it is the largest piece of that pie. And it's also the most rigid when it comes to when you can make changes, when you can't make changes. So um, when you start your workers' compensation insurance, that is what's known as your effective date, pretty common knowledge. And then to your point, Josh, every single year that policy is going to renew. The reason that it's best to renew on that same effective date year over year is for a couple different reasons. One, you're building history, as a contractor, as a business, and over time you can use that history to better leverage the marketplace. What's more is that as you develop that history, in most states, you'll have what's called an experience modifier that's promulgated over a period of time. For a new contractor, that's typically promulgated or developed after 2 years. For some more experienced contractors, you'll see that fluctuate every single year. And the reason that the state organizations don't want you to move midterm is that when you move midterm, it kind of screws up their rating process. And so, what insurance companies and state facilities have kind of agreed upon to deter business owners from moving midterm is they enforce penalties if you're to switch carriers in the middle of a policy year. And typically, those penalties, to maintain that law, if you will, they will offset any savings that you could achieve, even if you were to find a better rate in the middle of the term. So, what I typically recommend to my clients is, hey, if we set coverage in place, let's say on January 1st, it's really going to stay in place until January 1st of the next year. We're not really going to do much with it for the first maybe 8.5 months of that policy period. But with all of my clients, we typically start the renewal process about 120 days out, make sure that we have updated information if we've not been aware of that throughout the policy term. Really start marketing if we're going to reapproach the marketplace about 90 days out. And then depending on the carrier, depending on the situation, depending on the line of coverage, in an ideal world, we have everything set to go before renewal about 45 to 30 days out. But like every other industry, insurance companies are understaffed. So unfortunately, we're coming, a couple of weeks out before renewal is typically when we have everything ready to go.
Okay, perfect. Yeah, and I think it's just really important to come back to, and it's going to impact a couple of things we talk about around workers' comp. Is yes, this should be the thing that you think about most when it comes to insurance. It's your biggest expense, which is the first reason. And the second is that you actually have some control and some impact based on how you run the business. And workers' compensation is a question of when, it's not if. You will have some kind of claim in the last mile delivery space. There are all kinds of random workplace injuries that people incur related to the job and sort of related to the job. If you want to know how I got this scar on my finger right here, I was actually trying to open a package and accidentally cut myself with a knife. So, and that was technically a workplace injury. And so there are all kinds of opportunities that your workers will have to file these claims. And so, like I said, it's a question of when, not if, and it will affect your ongoing cost of insurance. And so, as we're talking about this renewal process, as we're going through it, what are the things that people need to be gathering or thinking about as they're trying to get renewal quotes? What should they be thinking about in that process? You said usually 120 days out. What's typically the things that are happening at that 120-day point?
Yeah. So specific to workers' compensation, we're going to get updated exposures, and the exposures on workers' compensation are typically how much are you paying your employees, how many employees you have, and where your employees operating out of, and what are they doing. So for the delivery industry, for trucking, it tends to be pretty simple on what are your employees doing. They're typically either dispatching, managing, or driving. We just want to find out how much payroll are we expecting for the next year, and if there's anything that maybe we've not understood throughout the policy term that was previous that's going to change in the upcoming year, and alert the carriers of that. That said, the other big thing, and you alluded to it with claims, we always want to get updated claims information from the previous year to be able to deliver that to any other underwriters that might be considering buying for your business, or even to the underwriters that currently have your business. That carrier is going to want that updated claims information. So we refer to that as loss runs. It's just an industry term, again, for a sheet of paper or a report that shows how many claims you've had, how large were those claims, what type of claims were there. Oftentimes there's a description like, Josh, you might have popped up on the workers' compensation for cutting your finger with that knife.
Yeah.
Just gives us a picture of what's happened in the account. But past that, that's about all we need to reapproach the marketplace at renewal.
Okay. And so when they're coming up for renewal, is it normal? Should they expect that their rate's going to change every year, or is that rare? How should they think about that?
Yeah, yeah, definitely. I would say it can change year over year. Most independent brokers, most independent agents would tell you that they want to get you to a point where your rates are predictable and stable year over year. In my experience, I see the biggest changes in rates from year one to year two, and then year two to year three. My clients that have been with me for 3 years plus at this point, we've got it to a point their mod has been promulgated, so we have an idea of how the state is viewing them as compared to their peers. We have an idea of the markets that are most competitive in their state, in their specific industry. It gets to a point where I'd much rather the insurance be a predictable line item than something that's going to fluctuate.
And then you mentioned claims. We talked about claims. Are there some types of claims that are worse than others in terms of how it affects your rates?
Yeah, yeah. So again, specific to workers' compensation, it's really designed to do two things in the event of a claim. One is going to pay for medical costs. So if you have a driver that when they're stepping out of the truck, they twist their ankle, they need to go to the urgent care. Workers' compensation is going to step in and pay for the medical bills associated with that visit to urgent care. If that injury is serious enough where the driver is going to miss time, then workers' compensation is going to step in and it can pay up to 2/3 of that driver's usual wages. So that's what we refer to as, lost time or, wage payouts. So with that in mind, the way that the losses are calculated in the eyes of the state and in the eyes of the insurance carrier, the med payout is actually viewed much less significantly than that lost time. So certain contractors, they have strategies on what they're running through the insurance and what they're not. And this is something that someone like me helps my clients out with, is depending on the nature of the claim, depending on what we're hearing from the doctor at that first medical visit. If we're expecting an employee to be out of work for some time, you can actually take on the burden of continuing to pay that hurt employee their usual wages, just run it through your payroll like normal, even though they're not working for you. And while you might experience more of a burden in the short run, it's not going to show up on your loss history over time. And as I've alluded to a few times, Josh, it's that loss history that affects that experience mod, which has a direct impact on your premium. And if you're just, filing every claim against insurance very quickly, that can get out of control, and you can find yourself in a world of hurt when it comes time for renewals.
Yeah. Yeah, and I think it's when you get in that state that it's really the question that I think a lot of contractors have, a lot of people I see have. So when you get to the point where you have a higher rate, is there advantage to switching carriers? Like, can they, once you're at that high rate, is jumping to another carrier going to save you? Are you stuck there? What's your thoughts on that?
Yeah, yeah. So I think this kind of coincides with the question you asked earlier about how much your rate's going to change year over year. And again, we want to get contractors to a point where they're with a carrier that they feel like they're partnered with, that they understand, the claims process, they like the billing options, so on and so forth. Under my impression, it can go both ways. Typically, if you're going to jump from carrier to carrier every single year, eventually you get to a point where, yeah, you might be able to save 5% here, 10% there, but eventually that reputation is going to catch up with you. And the work that it takes to remarket your account every year, the work that it takes to consider different options every year, it's not going to be worth it. And quite frankly, some carriers just might not be willing to quote your account anymore if they've seen it 4, 5, 6 times. So typically, I would say, unless things are really on fire and maybe there's a carrier that specializes in claims advocacy and that they're just excellent at handling a very specific type of claim, maybe that's when we make a change. But typically, if you've been with a carrier that you like for some time, it's better to make corrective actions to your business, implement different safety practices, maybe strategize with the carrier about, hey, should we be filing 100% of our lost wages through you, or should we be taking on some of that burden? Can we institute a small deductible on our workers' compensation? There's all different types of things that you can consider to make that partnership better, rather than just saying, oh man, this is a really large price. I don't know if I can afford this. I just need to make a change.
Yeah, and I think that's the thing that I think a lot of people struggle with is once they get to the point where it's high, they feel kind of trapped. And so you touched on it a little bit, but anything else you would recommend for kind of trying to control that over time?
Yeah, I think on an operational level, a lot of what happens with these type of businesses, these type of organizations is I'll talk to contractors who just don't really have a plan set in place of what they do when they have an employee that gets injured. And that sounds very, very simple, but it's just a matter of, hey, what are we going to do when we have an employee that has the encounter with the dog? What are we going to do when our line haul driver that's been holding the wheel in a very specific way for a certain amount of time, has that tendonitis pop up? Who are we going to talk to? Is it our BC? Is it us? Are we sending them to a specific medical care provider? Are we sending them to just any medical care provider that's closest? And then what's our plan with our broker and our insurance carrier to follow up on that claim as it unfolds? And having that plan in place, knowing, okay, from A to Z, this is what we're going to do, that's step number one. Number two, again, common sense, but making sure that things that your employees need to act safely are available to them. So back braces, non-slip shoes. Um, if you have an employee that's maybe returning to work off of an injury, giving them a jumper or a runner if you're a P&D operation for a period of time. And then lastly, I would say, and this is what I would harp on the most because I've seen it drive the most success, incentivize your managers and your employees, incentivize them based on their safety, incentivize them based on amount of days or weeks that they've gone without an accident, incentivize them on days that they have, yes, delivered all of their packages in an efficient manner, but they've done it without any kind of incidents or KPIs that are popping up on their vetter. All of that, it all compounds, and ultimately it results in you having a better loss experience over time, which coincides with your insurance premiums being kept under control.
Yeah, and I think it also applies to the whole point where, it's not just a one-time thing. If you've let your safety slip, that's going to take a few years to reconcile. It's going to be a staged process. So as much as you can do early and build the right foundation and keep safety the focus of your business, the more it'll save you, and not just short term, like really long term effects there.
That's
Uh,
right. Yeah.
yeah,
Josh, do you mind? I want to expand on that just a little bit. I
yeah.
think another important piece of it is working with your carrier not as an adversary against your business, someone that's just looking to charge you money for this coverage that you may or may not use, but instead, again, viewing them as a partner. And if you know that you've had a few slips and trips, talk with your broker, talk with your carrier about what you're instituting in your business to mitigate the chance of those same types of claims from happening in the future. Because at the end of the day, we're all businesses, we're all doing this to try and make money. If we can team up together and come up with plans that we all believe will lead to that end goal, it's going to benefit everybody.
Eh, just a quick aside, I saw a question come through that I'm just going to address quickly, which is that does this apply to line haul as well? Yes, the same insurance requirements are for FedEx P&D and line haul. Obviously, the different types of accidents or workers' comp claims are a little bit different in terms of what we see most often between P&D and line haul. Like Steve was mentioning, like line haul, it could just be the way they hold the wheel for 10 hours a day, every day for a decade has caused tendonitis, whereas P&D, it may be back braces from bending over carrying packages. But yes, the requirements are the same for line haul versus P&D. Okay, just a last thing here on workers' comp. So when it's time for renewal, regardless of how your rate is, you could have an amazing rate. Is there any advantage or disadvantage to get multiple brokers to quote you at the time of renewal?
Yeah. Like I mentioned earlier, different brokers have sometimes different things to offer. Generally speaking, if you're working with an independent broker that's familiar with this space, they should have access to the most competitive carriers. And in my opinion, if they're doing their job, they should be educating you on what the state of the insurance marketplace is. What carriers have increased capacity, what carriers have reduced capacity, so on and so forth. That said, I would say if you're going to consider, bringing in an outside broker, make sure you ask them questions like, "Hey, what products are you going to be able to deliver to me that my current broker can't offer? What markets, if they are just markets that most agents have access to, do you plan on approaching?" A simple question like, "How many contractors do you work with nationwide? Do you specialize in line haul? Do you specialize in P&D? Do you do both?" That will help you navigate those waters because Josh, I think what you're getting at a little bit is what a lot of people don't know is that when you hire multiple brokers, if we all go out to the same underwriters, those underwriters, most of the way that our contracts are set up, they'll only release one quote to one broker. So by having multiple brokers working on your behalf, for example, when I started in insurance 8 years ago, I would think, oh, it could never hurt to shop, right? That's going to drive down the price for everybody. What it can actually do is convolute that marketplace. It will lead to underwriters not putting their best foot forward, which hurts you, the end business owner. It can lead to the renewal process getting more frustrating, getting delayed, you not getting your quotes. And at the end of the day, you might be in a position where you're not being represented as well as what you would want to be because there's too many people out there giving bits and pieces of information to different corners of the marketplace.
Yeah, I think that's all really important advice. And most people probably think exactly like you did 8 years ago, Steve, where it's just like everything makes sense to shop around. That's how I get the best price. But that knowing that can hurt you and knowing the right questions you need to ask of the brokers who are serving you is critical for finding the best rates. And also just, it's not always about the rate. Sometimes it's about the ways that those brokerages are serving you and helping with like things like claims management, like you talked about, can have more of an effect than just saving a little bit on rates. So it's really important that you're thinking through those kinds of things instead of purely just comparing dollars to dollars, because you may get a cheaper rate from somewhere, but they're really bad at claims management. And so over time, your workers' comp rate continues to climb and you're paying much more over the lifetime of your business than if you had just paid for a little bit, worse rate brokerage. So there's a lot of things to think about beyond just the rates. Okay, so we spent most of the time on workers' comp. That's where I wanted to spend most of the time because it's where you spend most of the money. But I want to talk quickly about these others too. So truck insurance, I know it's not required, but most people should have it. Does it just renew at the same time? Is it the same schedule as workers' comp, or do you have to think about entirely different calendars for that?
Yeah, it's a good question, an important one to consider. So, for most contractors, when you initially set up your insurance, or for most businesses in general, you're going to have a congruent effective date across all of your lines of coverage. Specific to FedEx Ground, line haul, or pickup and delivery, most of the programs out there that are good fits for contractors actually renew on master policies. What that means is that the insurance companies, because they're aware that, whether you are in Michigan, like I am, in Tennessee, like you are, Josh, or somewhere else in the country, if you're a FedEx ground contractor, you're generally doing the same thing. They've essentially grouped those companies together. And rather than pushing a bunch of paperwork through, giving everybody their own policy, everybody's written on that one policy that renews at the same time throughout the year. Because of that, and also because there's not a state rating that's passed down for truck insurance like there is on workers' compensation, that effective date isn't necessarily as important. So technically speaking, if you want to consider changing your truck insurance, in the middle of the year, you could, and you could probably do that without a penalty from your previous carrier. That's not true in all cases, but in the overwhelming majority of them, it is.
Okay, so you've got a little bit more flexibility here, but a lot of times it doesn't even make sense to move that day, but you at least have more of an option there. Yeah. So we talked about how workers' comp pricing, the rates can change year over year. Do you see much fluctuation in your truck insurance policies?
Yeah. And so that's a good question. And it really depends on the type of program that you're a part of. So as I mentioned, a few of the national programs are built not only on a master policy where everyone has kind of the named first named insured rights or the named insured rights of that policy, but the rate itself is what we refer to as composite, which means that at the end of the day, whether you're a contractor in California or the state of Maine, the rate is the rate is the rate. And what's changing is the number of vehicles that you have and the value of your fleet. And that's what's really driving that premium. Your claims history, while it's important, it can maybe impact what tier you're in that program. It's not going to fluctuate your individual rates as much year over year unless the program itself changes. There's other products out there that are a little bit more traditional, and that's going to look at the individual business's merit. So let's say you had 5 accidents in a year and it resulted in 50 grand of paid out claims. In a program like that, yeah, you could probably expect your rates to increase at the next renewal. Whereas again, in that compositely rated program, while you had a lot of claims paid out, if the other contractors as a whole are generally performing well, you might not see your rates change over the next year, and you could potentially even see them go down. So it's interesting. I would say industry trends, just as we're coming, continually out of this post-COVID world, or I guess into this post-COVID world, the supply chain really did impact the auto insurance sector. And when we've seen things like auto parts being more difficult to source and ultimately repair time slowing down, so then vehicles are at a repair shop longer, which means that an insurance company is paying longer for rentals and things of that nature. All of that is starting to catch up with us. Just the inflationary times that we've experienced over the past 18 to 24 months, that's impacting things like property insurance, which auto insurance is kind of a subset of. So across the board, we've seen it increase over the past, call it 12 to 18 months. Signs are saying that it's slowing down a little bit or at least stabilizing. But I'm not going to sit here on this webinar and say, hey, everybody, like expect your truck insurance rates to go way down this next year because I just don't think it's realistic.
Okay, got it. Now a couple of when we're talking about workers' comp, there were some things you mentioned about safety, proper incentives, the way you manage the business that can help keep those rates down. Is there anything you can do on this side to just show the carriers that you're kind of going above and beyond and keeping the driver safe? Is there any benefit in doing things like that?
Yeah, I think it comes back to the narrative that you're sharing with your underwriters. And again, thinking about them as a partner, not just a vendor that you're buying product from. So, one of the benefits of FedEx Ground, and it's obviously expensive to meet all of the requirements that they put on contractors. But that said, with their safety requirements, as compared to other types of logistics businesses or route-owned businesses, we are already generally ahead of the game. So with the Vetter systems, with the sensors, with the requirements in our driver, with the fact that they have to go through First Advantage, so on and so forth, all of that, the best carriers that play in this last mile delivery space specific to FedEx Ground, they're aware of all of that. But it's, hey, can we leverage more of a narrative about I was awarded routes within my terminal because I'm performing better than my counterparts? Hey, I know the metal system is a sensitive topic, but hey, I'm silver trending gold. Here's why. All of those bits of information that you can share with an underwriter, it's never going to hurt.
Yeah, and I don't want to downplay this here. The idea that insurance needs to be a partner as
Mhm.
opposed to just a vendor that you go to, you just get a quote. If all you think of as insurance is, I get a quote, I didn't like it, but I got a quote, then you're missing out on a lot of the savings and the things you can learn too from actually partnering with them. Because, like Steve said, for you to get the best story, the best rate, really is going to come from having someone who knows your business that you're communicating with and that is willing and able to go tell a story to underwriters. Because it can't just be, yeah, this is a business with 12 routes. They've got 10 trucks. They had 3 accidents last year. What's the quote? It needs to be something where as much context as you can work with a broker to give that they can then take to get you the best rates. It's how you're going to save the most when it comes to this business, and especially save the most over time.
Right.
So let's just quickly touch on this last one before we get to Q&A. So EPLI, Employment Practices Liability Insurance. This is a requirement for FedEx. Not everybody requires it. This is something that, for years before FedEx ever required it, we told everybody to get. Generally, this is just something, if you're operating in America and kind of the litigious nature of our country, you should just have this insurance, especially with how cheap it is. So this is something everyone needs to have regardless of what industry they're in when they're in this space, because a lawsuit's, again, a question of when, not if. So
Yeah.
when you're thinking about this coverage, it is relatively cheap. And so, you're not going to see a crazy differences in pricing, but are there differences? Like, what are the things that you should be looking for as far as differences from carrier to carrier when it comes to this insurance?
Yeah. Well, hey, Josh, you should be selling this stuff. You did a pretty good job of selling it. But so like you said, the litigious society that we're faced with today, that's not what we were faced with 20, 25 years ago. So when certain types of lawsuits really started to pop up, when we started to see more of those billboards of 1-800 call the hammer, some
Yeah.
of these insurance companies started to experience it and also think to themselves, okay, this isn't going anywhere. We're going to see more of these claims. We need to get out in front of this and start developing our products and ramping those up now, because this is where we see the future. That we think that more of our clients, more of our customers are going to have a need for EPL insurance. And so I would say, talk to your broker about which standard market carriers, admitted carriers, are out there and have been playing in what is broadly called the management liability space, which EPL is a subset of. for some time. And it's those carriers that have been kind of ahead of the curve in this subset of insurance that offer the most competitive rates, which is important. But like you've said this entire webinar, Josh, not only are they offering competitive rates, they're offering the most robust product. And those are the carriers that, yeah, you're not just going to meet the requirements of your CSA, your master service agreement, or whatever parent company or customer that you're shipping on behalf of wants you to have. You're actually going to be purchasing a product that on your worst day, when you get hit with that lawsuit from an employee that says, hey, I have a lawyer and we need to work this out, you're not going to be left holding the bag. You're going to have a partner there to step in and ultimately help you.
Yeah, exactly. And now jumping to that, so when you have a claim,
Yep.
does that mean that your policy is going to skyrocket the next year, that they're not going to renew you? What can you expect when those claims do happen?
Yeah, for certain. So, kind of, as a reminder for everyone on the webinar, the way that EPL policies are designed is that in the event of a claim, whether it's legitimate or illegitimate, they're going to step in and help you with the burden of those legal fees associated with defending yourself. So again, even if your employee that was sued, or even if you as the business owner that was sued are completely innocent, you did nothing wrong, but you still have to face that lawsuit, this policy will still respond. Fortunately, talking about the state of the marketplace, liability lines have become more expensive kind of outside of workers' compensation over the past several years. Management liability continues to be a sector of the industry that we see having capacity. And when I say that, it means that there are carriers that are making money off of their books of business. And therefore, even when you have claims, even if they're quite large, it doesn't necessarily result in your rates skyrocketing year over year. That said, you might see a slight increase, but again, even if you saw a 100% increase on a $1,500 policy, that's only $3,000, so your P&L isn't completely destroyed.
Yeah, because sometimes these are hundred thousands, more in terms of claims you would have to handle yourself if you didn't have this policy. This saved us hundreds of thousands of dollars over the years while we used it. Now, I know it varies, but why is there so much challenge? Like, why are some states, is this a little bit harder of a policy than others?
Yeah, and I think that obviously as a microcosm, without naming any names, there are certain parts of the country that are a little bit more litigious than others. There are certain states that have specific laws that favor employees, for example, or favor third parties. In those states, it is going to be a little bit more difficult to find coverage from some of those standard admitted carriers that I talked about earlier. That said, they're still going to be present there. Their pricing just might take them off the table. It might not worth be considering for you. So in those states, one, again, talking to a broker that's familiar with that landscape is going to be helpful. I'll give you an example. When I get into states that I know it's a little bit harder to place this kind of coverage, there are actually brokers for brokers out there. So I have a management liability specialist that I partner with when I get into a difficult state, and he has access to markets that I don't have access to as just a retail agent. So all different types of things that we can do, but generally speaking, just to hit the nail on the head, if you're in a part of the country and if you're there, where it's a little bit more of a litigious environment, don't just think to yourself, man, I'm in a tough spot because of where I'm running my business. Do the work, find someone that knows how to independently broker, that understand the risk that you're facing with, because there are options even in those more difficult environments.
Perfect. Yeah, so we've covered a lot here, and really this is, we wanted everyone to be able to think through the process, the things that they should be asking of themselves and of their brokers as you approach the renewal point, and as you think about when you can even renew, and then how you can keep those rates low over time, but also how the things you need to be thinking about and looking for in terms of a partnership. And so I'm sure there'll be questions on that. We'll go over all of that in just a second. I've got a couple of things that I want to hit before we get to Q&A. So while I'm going through just the listings and events that are coming up, anyone who has any questions can put it into that Q&A button at the bottom of the window, and Steve and I will get to it in just a second. But before that, I quickly wanted to go over the new listings this week, 2 new ones. The first one is out of Georgia. It is 16 P&D routes at $600,000. This one has 2 managers. It has newer vehicles. and some assumable truck debt as well. So again, if you're in Georgia and looking for a larger business at a lower price, this is a good one for you. Last new listing we have is out of New Hampshire. This is 11 P&D routes at $895,000. This one has 4 spare trucks, a manager, and up to 75% seller financing if you're trying to get in. So if you're looking for a way to get into the space without using a bank, this could be the one that lets you move really quickly if you're interested up in New Hampshire. So those are the 2 listings. If you have questions about either of those, reach out to the team. We can give you all the details on the financials and the business and help you think through that. Lastly, just a couple of new events. So first, if you've never been to one of our new investor summits, those are designed as a crash course and learning everything that you can so that you can make that decision on whether or not the FedEx and logistics space is the right one for you or not. And so those used to only be in person. Now they are on demand. So you can go in and sign up right now and get into that course, watch all of that, see Steve and I talk about this space. Also, though, along with all of those on demand, there's also going to be in-person workshops that come with it. So both of those are going to be a part of the process. If you're interested, if you're trying to make the decision if this is the right space for you or not, really recommend that as kind of the final decision point. And you'll know really quickly at the end of that whether you should proceed with it or not. Beyond that, also have happy hours across the country that are posted on our website under the event side and in the chat right now. So if you're looking for any of if we're coming into your neck of the woods at any point this year, those are all available and listed. Those are completely free to attend. You can register now. We'll be there. We'll provide the food and drinks and the entertainment, and you can meet us and the team while we're on site in your neck of the woods. And then the last one is the Expo, which is our giant contractor event that happens every summer. This year, it's the first week of August, and we're in Dallas, Texas this year. Again, this is completely free to attend as well. So it's a full on-site learning, networking, multiple days, and we provide all of the food, all of the drinks, and definitely all of the entertainment for this one. And the only thing you have to pay for is making sure that you get there and that you pay for the hotel room. And the real thing is those hotel rooms do sell out and are already starting to look at, we're starting to have limited stock already. So if you want to come to the Expo, make sure you go ahead and reserve that hotel room now so that you can maintain our cheaper rates for that. Okay, so all that being said, I'm going to pop over to the Q&A. So first one here is for you, Steve, and I know that this is going to be kind of we'll see if you know this or if I know it's going to vary business to business, but any kind of percentage range of revenue that you've seen in terms of how much workman comp is as a percentage of revenue for a business every year?
Yeah, so if I could actually answer that as a whole, kind of the required insurances for most logistics operations, but specific to a FedEx, is that if you're to look at your gross annualized revenue, I would not expect your insurance to exceed 6% of that figure. So again, generally speaking, we see the total workers' compensation premium being the majority of that. So sometimes that can be 4 to 5% of your overall revenue, and the other lines make up the rest. As far as rates on workers' compensation, exactly if that's maybe what the question was getting at, that obviously fluctuates state to state. If you're in parts of the Midwest, you might be dealing with a workers' compensation rate that's somewhere in the 2s or the 3s per $100 of payroll to your employee. If you're out west or in some parts of the Southeast or in the Northeast, you might be seeing your rates at $10, $11, $12, $13, depending on what exactly you're doing.
Yeah. Yeah, that base rate's a function of the state. You don't get to change that. All you get to do is work in the playground that you are given and try to operate as best as you can there. Okay, next one here is from Eugene. I think we can kind of tag team this one. So first part of the question is, are you required to have health insurance? How many employees do you need to have to acquire that insurance? So I'll start by answering that, and then you can kind of talk about, because we didn't really touch on it, the ways those two can work together. No, you're not required to have health insurance, at least in the FedEx space. Not really in any of the spaces are you required to have it. There are lots of advantages to having it. Now, I will say that the threshold that requires that you have it is 50 employees. And an important thing to note in the FedEx space is, let's say you have multiple entities at multiple terminals across the country. generally they're going to look at common ownership, and you won't be able to just say that that one entity has 10 employees, so I don't have to do it. If you have 6 entities and it adds up to 60, 70 employees, you're probably going to fall under the over 50 employees and have to have insurance federally. That's just a federal law, not FedEx. Other than that, there's plenty of contractors who use health insurance at any size. It depends on who you're using and what you want to offer. It doesn't always make sense to use one of the Blue Cross Blue Shield type insurances when you're a smaller company. Realm Health is one that we often recommend for those smaller types of companies to give you a lot of flexibility there. And Steve, I know that a common thing is, how can health insurance help keep insurance rates down on the liability and workers' comp side?
Yeah, I think it's pretty self-explanatory. So workers' compensation is what we refer to as first dollar coverage. So what that means is in the event of an injury or an illness that's contracted at work, workers' comp is what's gonna pay out first. But where we really see workers' compensation and health insurance marrying together is one, if you're offering health insurance to your employees, it's gonna tick down those kind of incredulous, maybe borderline suspicious workers' compensation claims that, hey, that your driver was moving their mattresses over the weekend, and it just so happened that when they came back after the weekend, Monday afternoon, they hurt their back. Those type of claims do definitely get reduced when there's health insurance available to them. And then what's more is over time, if a claim is ongoing and longstanding, there is a point where if workers' compensation coverage is exhausted, health insurance can then step in and continue to pay for an employee's medical bills if it's applicable. So I would say they're absolutely married together.
Perfect. Okay, last question here. And if anybody else has any questions, make sure you're typing it in while I'm answering this if you want it to get answered. Ed asked, does FedEx have a list of companies that they recommend for insurance? So the way FedEx works is they typically will have some preferred vendors. For some things, like for scanners, there's only 2 vendors you can use, and they'll point to those 2 and say you can't use anybody else. For some others, like insurance, that's not the way it works. They have one that they'll recommend because that one basically cannot turn down FedEx contractors. That's the deal they have with them. But that, as we've talked about, that often doesn't mean they have the best rates, and it often doesn't mean that they have the best service and relationship. So where there is one that they kind of mention, it's because they have a deal with them. And so a lot of people don't even realize that there are options in the insurance space because of it. But this is not a space where FedEx requires one insurance provider or another. But what they will have is there's one extra step if you're not using that preferred vendor, where you just basically get a form that says it's compliant with the overall insurance policy, and it's really easy to get.
That's correct. Yeah, and I would say that most carriers that independent agencies are working with in general, the requirements that FedEx Ground puts on those type of carriers that they will allow their contractors to work with are pretty broad, and it's a pretty low bar. Might be a bar that you could trip over. So if you are seeking coverage from a non-FedEx endorsed carrier or broker, just know that, for example, all of the carriers that someone like me would bring forward are approved by FedEx Grounds, and like Josh said, getting that compliance piece crossed off or checked off is very simple.
Yeah. Perfect. All right. Well, I'm not seeing other questions, so I will call it here. So Steve, thank you so much for being here, for talking through all of this. I know it can feel, this is a process that a lot of people just avoid. Instead of thinking about if they should change partners, they just it's the vendor that they think about, don't like the price they pay, but don't know how to fix it. So this was really just a conversation to help people think through it. It's not as scary as it appears, and it's especially easier if you actually have a partner on the insurance side that you can ask these questions to and think through the process together. So Steve, really appreciate it. You being on here and being here for everybody today. And hopefully your 3 feet of snow stays there, because if we get more than we have now, I am toast and will never leave this house. I think I have a quick raised hand. If you have a question, put it in the Q&A, but I'm already on the way out. So if you type fast while I'm finishing this, I might answer it. Maybe it was an accident. Okay, perfect. All right. Well, Steve, thank you. Stay safe. And hopefully everybody else who's getting weather across the country like we are also stay safe and warm and the power stays on. Thanks again, Steve.
Thanks, Josh.
Yeah. See you, everybody.